Welcome everybody, and thank you for joining us for today's webinar. My name is Nick Banks and I'm a business advisory partner at Scrutton Bland and lead our agricultural team of advisors. Following our collaboration in January for our Sustainability from Farm Data Seminar at Trinity Park, I'm delighted to be joined this morning again by Jeanette of Ashtons Legal and Hayden Foster of Clarke and Simpson. In January, we were only too pleased to provide bacon rolls, but in these different times, I fear you've had to bring your own coffee to today's event. The plan is that we'll each present for 10 minutes or so, and then, time permitting, we'll be pleased to answer questions at the end with a view to the webinar finishing after about 45 minutes, sort of 10 to 9. You can submit your questions through the chat function on the screen, and you should see a speech bubble icon if you hover your mouse towards the bottom of the screen. And they can be sent to everybody, and all will see the comments that are being made. Right, so a presentation delivered at the current time clearly can't ignore coronavirus, but talking to my clients, it is the weather that is causing most concern and likely to have the biggest impact on their business than the pandemic. Operationally, the countryside, scale of workforce and ability to social distance has meant work can continue without the restrictions faced by others. There are hotspots clearly: holiday letting, risk of rent default by commercial and residential tenants, and activities such as farm cafes. Availability of seasonal labour is also an issue. There has been opportunity too. As supermarket shelves became empty, farm shops were often seen with box deliveries in the community, reaching out to the community to increase their own trade. The challenge now will be to retain that custom as lockdown eases. The lockdown of leisure, food services and hospitality has clearly impacted markets. Dairy is not extensive in our region, but as a sector has been hit hard with excess supply and weak prices. And recently the Dairy Response Fund has been released. The AHDB report demand for barley in the brewing, malting and distilling sector was 28% down in April, and we await Boris's speech later this week, or possibly today given speculation in yesterday's press and media, to learn when pubs might start trading again, but it is likely that there will be excess supply, compounded by a greater area drilled with spring barley. I've seen speculation on social media that the straw may be worth more than the grain. The potato market also faces an excess supply due to the severe contraction in demand by processors, which will likely impact prices. There are positives. AHDB report a 1.1% increase in milling wheat usage, and last week both deadweight cattle and pig prices were up on last year, running above the 5-year average. As you all appreciate, the government have released a number of support measures to help businesses get through the pandemic. I do not propose to cover the various schemes of support in detail, and there is much content online about them. I think the role of you may be that you've signposted tenants and colleagues to schemes to support them so that they can meet rent obligations, for example, if their income or business has been impacted. I've seen a number of bounce back loans claimed, in many cases precautionary rather than absolutely necessary. Some has been applied to pay off more expensive debt, which does make sense. Given the impact on some commodity prices and margins, applications for loans, whilst they remain available, perhaps ought to be considered, given the interest rates and lack of arrangement fees. It is important, though, that if you do secure additional funding, that you remember your capacity for debt servicing, which is something I'll touch on a bit later. The repayment term is 5 years after the first year holiday, and will therefore need to be considered with other debt obligations for term loans and hire purchase. A number of my clients have received letters from HMRC about the well-publicised self-employed income support scheme. Interestingly, that conversation has very much been around a moral dilemma on the basis that if you don't feel that your business is severely impacted specifically by COVID, whether one should claim or not. If you do claim, then remember it is a grant and it's a taxable grant, which will be within your profit reported for the year, so you all pay tax and national insurance on it. There is an automatic deferral still of any forthcoming 31st July tax payments. That's automatic, no interest or penalties. The payment will be due 31st of January, but it's worth taking advantage of, particularly if you're operating in bank overdraft to save finance cost. Similarly, VAT payments, if you are due to make one, rather than perhaps the more usual repayment, the VAT payments falling due up to 30th of June can be deferred. If you have taken advantage and cancelled your direct debit, it's important to remember that you restore that direct debit to make sure that future payments are made on time. The 18th of June last week saw the publication by DEFRA of the first estimate of total income from farming in England, and a 13% increase is reported from £3.5 billion to just under £4 billion. And this improvement we're starting to see is reflected in some of our clients' accounts, which we're now completing to incorporate last year's harvest. Income tax planning is therefore sensible, as balancing payments due in January could be significant at a time when cash flow may be affected by an underwhelming 2020 harvest result. It is also important, given that this year's profits may be lower, that payments and accounts are reviewed to ensure that they are made at the right level. If you do defer the 31st July payment, then the cash hit will be significant, so cash flow must be planned. Farmers averaging, pension and capital allowances are options to mitigate tax. An important point of capital allowances is that the annual investment allowance, which is the 100% deduction in the period of purchase, is set to reduce from the 1st of January 2021. So if you're planning your capital expenditure, the current limit of £1 million expires on the 31st of December and returns to £200,000. So timing of investment in your kit is important to ensure that the optimum amount of allowance is available depending on when your year end falls. Of course, those limits may be reviewed in the expected summer budget. Given the COVID action taken by the Chancellor and the debt burden the country now faces, it's difficult to see how tax rates cannot go up, and almost certainly tax relief perceived as too generous reformed, which puts agricultural produce relief back in the spotlight, as Jeanette will discuss shortly. There was much speculation it would be looked at in the last budget, but that budget, of course, was rather derailed by the escalating pandemic. It was interesting, though, to see a report, I think yesterday or possibly Sunday, where there's rumour the Chancellor might be cutting VAT in a bid to stimulate the ailing retail economy in the high street. Returning to total farm income, this slide shows more of the detail extracted from the report, and I've highlighted the proportion of the net total that's attributable to subsidy, and that's 54%. A big proportion, consistent with our atypical Suffolk farm, and is a fact that no doubt all of you appreciate. The challenge of weather, a global pandemic and Brexit is compounded by the impact of the agriculture bill, and I've not read anything, despite some lobbying, to suggest that the bill will be delayed or revisited as it makes its way through Parliament. We know the two key outcomes are reduction in direct payments and a transition from countryside stewardship schemes to ELMS. As direct payments taper away, a funding gap will manifest. Fundamentally, in my opinion, this gap can be plugged by improving farm profitability, increasing sources of diversified income, or increase agri-environmental scheme income, and maximising the opportunity that ELMS will afford as more detail becomes known. It seems ELMS is a mechanism that can reward your endeavour that markets do not necessarily do. The focus of the bill to improve farm productivity, whilst protecting and enhancing the natural environment for public good, is captured in the concept of natural capital. One should always have an eye on the future and not just the current year profit and loss. A strategic review may not be required every year, but should be undertaken periodically, and progress considered each year, and certainly now is the time to appraise natural capital. Consider with your advisors a SWOT analysis and consider constructing a natural capital balance sheet. I'm sure many of you would have joined and participated in some of the webinars, and it was interesting to see how the cereals event adapted to run itself on a virtual format. And on one of those webinars, there was a question posed, and it was, do you think arable farmers can take early action towards net zero over the next 5 years? 509 viewers voted, and 73% said yes, which suggests to me that the engagement and desire to deliver environmental benefit is real. Now, I am an accountant, as you know, And therefore it's come no surprise to you that I'm going to say it's important you know your numbers. I've posed some questions on this slide, and I think you need to consider whether any of these are relevant to you. But if one needs to improve farm profitability, do you know the impact on how you're doing if you don't truly measure your cost of production? Net profit does not mean you are cash positive. Earnings before interest, tax and depreciation is not a figure explicitly stated in your accounts, but it is a measure that's considered in your debt servicing. You need to understand loan covenants and debt servicing obligations, and remember that if you're self-employed on your own account or in partnership, your drawings and personal tax and private proportions of certain expenses are not considered an expense in your profit and loss account. They're considered drawings, and therefore when you're appraising your EBIT figure, you have to account for that in determining what cash surplus remains to service debt. And again, given the uncertainty as to how we think the 2020 harvest may look, it's important that you are considering the cash flow over the forthcoming 12 months or so. And that's particularly relevant if you do consider to utilise capital allowances and committing to more hire purchase. Scrutton Bland are strong advocates of cloud accounting, and the cloud offers the scope to integrate sources of data for analysis and measurement. The enforced remote working of recent weeks has proven the value of cloud in making that transition much smoother. Equally, it is important that at times of change that the advisory team around your farm and estate collaborate. Many of us have climbed a steep learning curve with video platforms such as Zoom, Skype, and Microsoft Teams. But it has proven that you do not have to be in the room for every meeting, and the elimination of travel time can make it easier for the wider team to participate in a time and cost-efficient way. I certainly in the last few weeks have participated in some very effective meetings with land agents and solicitors, with clients. And we're making decisions, I think, more quickly, which would otherwise be protracted through disjointed discussion and email correspondence. Undertaking a strategic review of the farm and estate does require collaboration, of course, and never more so for succession planning. And on that note, I'll stop showing my screen and hand over to Jeanette. Thank you.
Good morning, ladies and gentlemen. As Nick has said, this is a follow-on from our our seminar that we did up in January at the Trinity Park, when obviously we could see all of you face to face. It's slightly different now. What I'd like to cover here are things that are on my desk. When we set up the discussion for topics, we were looking at what, at that point, we were getting in as questions from clients. So what I would like to do is just share with you some of the things that have been on our desks. And okay, so questions. These are things that have been coming in to us in the last 3 months. So we've been answering the phone. Obviously, we're working as normal at Ashtons Legal. These are the questions that we're getting. How can we stop farmland being sold if the children divorce? We don't want the junior partners to own the land. Often, do you know, that's often the reason why people don't want a written partnership agreement. They truly believe if they don't have a written partnership agreement, they don't really have a partnership. And my son wants a salary and I want a pension. It's all about, as Nick was saying, it's taking too much money out of the pot. Beware of the bottom line. So in our world, what do we do about this? Well, we've got some legal documents that we generally prepare. We listen to what people want. We tailor those documents to what people want. And you have to actually ask why we're doing it. Well, we're doing it because farms generally have succession uppermost in mind. But one of the things we always ask is, what type of business structure do you have? And when Charlotte at Ashtons put this slide together, I asked why she picked it, because as you can see, it's a picture of skyfall wheat, but intermingled with a tiny bit of black grass. And I had to look a lot for this to find the black grass in this 110-acre field. And the point here is the devil is in the detail. You have to look for the detail. You have to look at what's in the accounts. You have to look at what type of business structure you've got. The fact you're calling it a company is in fact possibly a misnomer. It's probably a partnership. The fact that you're trading together but you don't call it a partnership, you probably are a partnership. Another point, as Nick has mentioned, look at your assets, particularly in mind the agriculture bill. Public access is going to be a huge issue. It could be a win for landowners. But ask who owns the land? Why does it matter? And again, what we can do at Ashtons Legal is a set of documents which effectively mean that the landowning generation can remain owning the land, yet we actually put the land into the partnership without it going down at that point to the younger generation. And why do we do that? Well, uppermost in my mind, and those of other farmers, of course, is tax. And we always work with accountants and land agents to look at the tax position of our clients. And as Nick touched on, we're going to be looking pretty soon at a budget. So the taxes we look at the moment are inheritance tax, capital gains tax, income tax, and stamp duty land tax. And the last is actually a bit of a sting in the tail, because if you have land in a partnership, do be aware about changing the profit and loss ratios on the income side. It could inadvertently trigger a stamp duty land tax issue. So why inheritance tax? Well, we're looking at succession. But the point here is the man in the pub isn't always right. So a number of times we've been told, well, agricultural property, that gets full relief from inheritance tax, doesn't it? Well, it doesn't. It gets a relief against the agricultural value, but not against the non-agricultural value or the hope value for development or for properties that are not actively within the business, used within the business. And there's only allowed one farmhouse, not a myriad of cottages. I know Hayden's going to cover next about some of the points for letting cottages, and those cottages are probably a very valuable part of a lot of property portfolios. And to get relief for those, you need to be looking at the more generous business property relief. And that's what we at Ashtons Legal seek to do, to try and get you on the first steps of claiming business property relief. And I put there about some comments that we heard through the CLA at an event over here towards Cambridge in February. It was the head of the Office of Tax Simplification, gave a very, very good presentation, but he made it very clear. The majority of people in this country believe inheritance tax is fundamentally unfair. They believe that the people who have the land, who can afford to pay it, should pay more. And that's bad news for most of the people listening to this webinar. So I'm often asked, why should I have a written partnership agreement? In fact, we're dealing with one case at the moment where they've been in partnership since the late 1980s, and one of the partners is in total denial because there isn't a written partnership agreement. Therefore, he says it isn't a partnership. So why have one? Well, the law isn't exactly up to date if you don't have a written partnership agreement. The most recent act is the Partnership Act 1890. Yes, I've got that the right way around. It's not 1980, it's 1890. So that gives you a good starting point as to why you need to write down, when you're all getting on very well together, what you're actually doing. And the law, if you don't have a written partnership agreement, it automatically dissolves the partnership on death. Under the Partnership Act of 1890, there'll be a full sale of assets at market value unless all the partners who are remaining agree otherwise. And I'll be honest with you, it is so disappointing when you have a farming family who've worked for 2 or 3 generations, then completely pull themselves apart on the death of one of the partners because there isn't a written partnership agreement. And I put there a sarcastic note, it's good money for lawyers, but it's not fun, and it's really bad money for us as well. We don't enjoy it. So please, please, a written partnership agreement. And for the bankers who are listening to this, just a quick word. We have recently picked up, and I'd welcome comments on the chat, We've been told by quite a few of the main clearing banks that they now require evidence of a written partnership agreement, not least for mandate changes, but also to bring in the next generation. So gone are the days where people could inadvertently wing it. You are going to now be looking at a written partnership agreement. Otherwise, and again, I'll happily stand corrected, the bank will freeze the business account on a death or somebody retiring until everything is resolved. Last slide, sorry, Elizabeth, I've slightly run on. We're getting a lot of inquiries at Ashtons Legal on employment situations, inevitably on the furlough scheme. If you go onto our website, there is an update webinar run by Jess Piper of our employment team. So have a look at that. I think Elizabeth is also sending slides out afterwards, so you can click on that as well. So I really do want to hear from you later about your questions. I'm now going to attempt to stop sharing my screen and hand over to Hayden. So fingers crossed. Thank you very much for listening.
Morning, everybody. It's really good to be here today. Thank you to Nick and to Jeanette for their talks. I'll just start by saying I am working from home today, as all of us have got used to times through this period. If you do hear anything in the background, I assure you that there's no animals getting hurt. It's merely a fight for the broadband, or it could be. But I assure you, it's probably just the Foster version of Joe Wicks going on in the background. So when we started talking about this, we decided, what should we talk about? I could have talked about land prices post-pandemic, or even post-Brexit. That's still going on in the background and not happening very quickly from what I can see. Nick has talked a bit about the elms, and we could have talked about what effect that would have had on agriculture a bit more and where it was heading. But there's a lot of that at the moment. And as Jeanette quite rightly said, we wanted to talk about things that people are calling us about and things they're asking us about. And in our case, that was mostly residential lettings. Most farms, as Jeanette said, have a cottage or two. And when incomes are under great pressure, they can bring balance to a land portfolio. And many of the most successful businesses we see are a combination of property and agriculture in the wider sense. Coupled with that, over the last 3 to 5 years, we've seen a lot of changes in the residential lettings market and a lot more regulation, one has to say. Minimum energy performance, more legislation related to carbon monoxide, smoke detectors, Legionella, electrical safety, tenant charges, and reduced deposits, to list but a few. And I'm certainly not saying all of those are wrong, but they do put pressures on incomes in that context. Those things, you might think on the face of it, would probably make residential lettings a less appealing investment. But in truth, the private residential sector hasn't shrunk significantly. And so therefore, it would indicate that people still in the UK like bricks and mortar as an investment, as they always have. So I thought I'd talk a little bit today about the residential lettings market, what we're seeing, and significantly I split it into two parts really: the temporary arrangements for the pandemic and the more permanent changes that we're seeing in the market at the current time. So it's important for all landlords to understand the temporary guidance that's enforced from government. The strong advice from government is that generally tenants should pay rent. There is no requirement, no legislation that requires a landlord to give a holiday or a deferred payment plan or any such, although the legislation specifically refers to compassion being encouraged. The belief of government is that through the furlough scheme and the self-employed support scheme, they have supported most tenants sufficiently for them to pay their rent. And I would say in our portfolio that we manage at Clarke and Simpson of, say, towards 400 properties, the vast majority have managed to keep their rent up to date, albeit there's been discussions along the way. In terms of notice to quit, whether one's serving a notice on a short hold under Section 8 or Section 21, notice periods have been extended to 3 months. Of course, under the more recent legislation, it's more normal to serve these at any time now rather than relying on the term date. Probably of more importance and significance is where the tenant does not willingly leave. Claims for possession were initially postponed for 90 days on the 27th of March, and that provision has now been extended to the 23rd of August. This may cause more significant problems where debts have arisen and it may be difficult to get people up to date. And I suspect even more significant beyond that is the backlog that there'll be when they do reopen the courts. So that extension and that time delay may turn out to be much, much greater than it appears on the face of it. So the government have launched a scheme. It's called, I'll have to read this, the Private Rent Sector Landlord Non-Business COVID-19 Loan Scheme. Catchy, that one. It's a £5 million fund, interest-free for when tenants have difficulty paying, offers eligible landlords up to 100% of the loss of income for someone who owns between 1 and 5 properties and they're not classified as a business. I have to say to date, we haven't had any experience claiming under that scheme, and I raise it just by way of notification. So let me move on to the more practical matters. The advice is that repairs and maintenance, where possible, they should continue, subject to social distancing. There is a positive duty to deal with safety issues, which in most cases is the gas safety certificate. And if a tenant says, no, you're not coming in for X or Y reason relating mostly to the pandemic, then you have a duty to get proof that they are not allowing you access, because the duty of care remains with the landlord, that the current gas safety certificate is more important than not entering the property in most cases. Viewing is quite an interesting one of available property. Funnily enough, we were started up some weeks before a lot of other businesses, and there was an immediate demand. The encouragement is for initial viewing being virtual. That it generally means looking at photographs or a video. It's nothing really elaborate. And then physical viewings limited to members of the same household, no block viewings, 1 or 2 people at a push, face masks being worn, and importantly, all doors and probably windows being opened by the occupier or the person undertaking the viewing, so those visiting the property don't touch anything, and sanitisation afterwards as required. This seems to be the new normal. People accept it quite willingly, and it seems to work quite well. Interestingly, we've been ramping up with inspections again of let property, and again, people have a desire to get back to what is going to be the new normal. That's what we're finding. There's been some changes to the right to rent checks. They are broadly changes that are procedural in order to deal with issues that might become because of social distancing, but overall that continues. So if we move on to more general matters, 1 or 2 interesting things there. During all of this, on the 31st of May, the transition period ended in respect of the tenant fees ban. So even old agreements which had provision for landlords to charge tenants for legitimate things, those provisions are now void, and everybody is affected in the same way. The electrical standard regulations, which we thought might be delayed, actually came into force as planned on the 1st of June. They apply to all new tenancies from the 1st of July and all existing tenancies from the 1st of April. Far be it from me to question government logic, but what they've done effectively is meant that all of these tests will need doing in the same 12-month period rather than spacing them through a 5-year. It would have been much better to phase it in, and it will cause us great deals of capacity issues with electricians. So what do these regulations actually say? They say that all electrical installations must be inspected by a qualified and competent person every 5 years. Interestingly, in some cases, the electrician will only issue a 3 or 1 year certificate. My view is it would be an unwise landlord who continues to rent a property without a current certificate. So I think the time frame may be shorter in the case of some properties. It will apply to almost all let properties, including secure tenants, Technically, where those move from a fixed term to a periodic tenancy, it could kick in at that point. That's been confirmed by Arla now. Interestingly, social housing has been excluded. Make what you will of that. I don't fully understand it myself. And one question that we've been asked by a number of people is new build properties, which are traditionally given a 10-year certificate, they will have to be retested after 5 years. That's just the way the legislation is written. I talked very briefly on Legionella. I pick it up mostly because it's just a bit different to the other things. There's no legal requirement to do a Legionella risk assessment, but there is a responsibility to assess risk and act responsibly, and some properties will carry greater risk than others. The reason I pick it up is because we've had 1 or 2 landlords where their policies have, their insurance policies have said they'll no longer cover Legionella where a risk assessment hasn't been done. I don't think it's a great risk, but it's just an interesting point. We're all, of course, now used to the requirement to hold deposits in one of the 3 schemes. That's become very much the norm now. We've obviously had the recent changes whereby the allowable deposit is only 5 weeks rent now. The sum's not ideal, but again, we've coped with the change, and actually it means active management is ever more important. That's what I would say to any landlord. You must face your problems straight away as they arise. You must be going in, you must be inspecting, you must be looking. And if you're not prepared to do that, instruct an agent who is prepared to do that for you. That's their job. It's not making it difficult. And actually, it's often more cost effective than you think, bearing in mind the landlord will address the rent levels, for the landlord frequently, whereas we find a lot of times landlords haven't changed rent levels for 5 years. And actually, I don't believe that's the right thing to do either, to get big jumps. So covering all that, it's not all bad news. The statistics from 2008 show when we had the last economic downturn that residential lettings were a very solid investment. In fact, we had a period there, especially at the lower end of the market, where property prices were falling and rents were still increasing. And historic evidence further back that says that at difficult times, residential lettings are a good investment, and they reinforce that point. Since reopened, we've had superb demand, very significant requests for viewings, multiple applications for all properties, and the speed of agreement, I have to say, I think is faster than it was pre-pandemic. So some good news there as well. Thank you all very much for your time. I'm most grateful to you. And at that point, I think it's time to hand it back to Nick to see if we've got any questions or to give the closing remarks. So thank you all for your time.
Right. Thank you very much, Hayden, and thank you, Jeanette. 2 very interesting presentations, and really interesting to hear the interest in the lettings market and the property market, which is encouraging as lockdown eases. And certainly the points that Jeanette made in her presentation, Hayden and I can testify to, because we've been working over the last 12 weeks on a case whereby not all the paperwork one would hope, I can see Hayden smiling, not all the paperwork one would hope is in place is there, and we're doing we're putting the scaffolding up to sort it all out. I think the other thing I've learned from that exercise is the difficulty scanning one of Hayden's large maps into electronic format when it arrives in the office, and Jane, my receptionist, gave up in the end, so I had to go and collect it.
There is still a case for post on occasion.
Yes, indeed. I'm not sure, where's the questions gone? I don't know that we've had any questions submitted. We are round about 8:45. Are you there, Jeanette?
Wondering if people want to, sorry, can you hear me all right?
Yes.
Perfect.
Thank you. I'm just wondering if people want to, they can obviously email us direct with questions if they're time short or they don't want their questions to be visible attributed to them. I've just realised, of course, the chat isn't anonymous, and some people may ask questions that they'd rather not others see, if you see what I mean. So I would suggest that people email us direct. And thank you, that's brilliant. Thank you for giving us that detail, Elizabeth, there. So yeah, that would be my view, unless people have got anything burning at the moment. But so
in the absence of any questions, I'd just like to thank you all for joining us. And as Jeanette says, if there are any questions you would like to ask, please email. I've put our contact details up on the screen. I think Elizabeth will be sending copies of the slides out after the event, and there'll also be a feedback form. We'd be very grateful if you could take the time to give your feedback so that we can shape future events. So with that, I'd like to say it's a good. I was going to do a bit of a two-runs, a goodbye from me, and that could be a goodbye from Jeanette. Goodbye.
I was just going to quickly say, if people want us to do another update, please could you say that as well, because we're very happy to, and particular topics you want us to cover. All right.
Super. So yes, so I think it's on behalf of us. Thank you for listening, and enjoy what looks to be a glorious day. Thank you very much.
Thanks all.
Bye.
Thank you. Bye.